virus has forced countries to choose lockdown. The government of every country was trying to evade the situation of lockdown. They knew that halting the industry's production and trade will cost them on economic fronts. Although no one has other options, saving a life is the ultimate goal for any government in the world. The recent weeks has displayed scenario related to crumbling oil prices. The oil barrels now have worth in negatives of the dollar. Ships which were known to be the cargoes now anchored on the shores as storage of the oil. The economic impact of COVID-19 has been very harsh over oil industry. COVID-19 has imposed lockdowns. It has differently affected the demands of the oil. The lockdown kept trade at halt, which means the transportation has dropped to negligible. As there is no trade, the demand for consumption has plunked down. The supply of oil is impossible for cut down to zero. Due to mismatch in supply and demand, with a huge margin, the world is running out of the storages. Traders are stocking up the ocean tankers with the crude oil in the hope that they can get good prices in times ahead. The demands of shutdown and the impacts they are cheating over the jobs, industries, banks and economics have made the entire world to join forces. The nations are planning their cut down of production of oil by coordinating with each other. Moreover, the intent of crisis has dropped their ideology and planning as the prices for the barrels have tipped down to negative. Shutdowns are now the harsh reality in the world. It is a dreadful scenario for producers and refiners. Torbjörn Tokvist, head of the commodity trading giant Gunvor Group, has predicted that we are weeks away from the end game. The oil production cut should have come from the OPEC Plus alliance. They have agreed on reducing the production from May 1, although the fall of prices to negative minus $40 a barrel in Texas made the USA led the production cut. The oil industries have shut down rapidly in USA. Before the pandemic, there were 650 types of machinery working in the USA. With the arrival of virus, 40% have stopped and only 378 are in operation as of now. The price shock has been particularly intense in the physical market. Producers of crude streams such as South Texas Store and Eastern Kansas Common had to pay more than $50 a barrel to offload their output last week. Regulators in Oklahoma voted to allow oil drillers to shut well without losing leases. New Mexico made a similar decision. Oil producers have already shut down around 6,000 wells. It has curbed around 405,000 barrels in a day, or almost 30% of the American total production. Unlike the coronavirus, the output cuts of the oil is not limited within the boundaries of the USA. Chad, Vietnam or Brazil, everyone is either reducing the output or about to do so in the nearest future. Saudi Arabia, Russia and rest of the OPEC Plus alliance will join the output cuts. They will cut down the production by more than 20% of or around 9.8 million barrels a day. All of these efforts are praisable, but surely not going to be enough to battle out this crisis. Every week 50 million barrels of crude are going into storage, enough to fuel Germany, France, Italy, Spain and the UK combined. This rate would make storages to run out by June. Oil crises are now inevitable. It is now about the extent of crisis and its controlling measures.